Good afternoon. Welcome to GrainTV. My name's Cody Bills. This is Logan Burgess. Today is Wednesday the 31st, and we had a bit of a sleeper day in the markets. Let's take a look at the Firetip trading platform, see where we closed off the day. Corn for September delivery trading up 3.5 cents, with December trading up only 1.5 cents. Soybeans for August delivery trading up 24 cents. Now keep in mind, we only had about 3,000 contracts traded. It is first notice today, so make sure if you are in those contracts, you might want to consider rolling out into the September contract. Today, the September contract traded up 0.75 cents. For soybeans, we saw the November trade up 3.25. Wheat in Chicago did trade a little bit higher here, up 9 cents, with Kansas City wheat on its heels. They're up 10.5 cents. Yep. Logan, you know, one of the things that we've been talking about today was the spread between new crop soybeans and new crop corn. Yep. And maybe you could kind of walk us through, why have we been seeing new crop soybeans putting on such a premium to corn?
Yeah, certainly, Cody. Let's take a look here at the chart we were using in yesterday's show. Basically, this is just showing the ratio between new crop soybeans and new crop corn. You can see here, really since about the first of the year, the ratio there was hanging in around 2.3. And just in the last couple months here, we've seen it trade up quite a bit. So with soybeans building in a pretty good premium over December 13 corn. And one thing, you know, we were talking about before the show here was that it seems like acreage may be a concern for soybeans in particular. Certainly, we know in the last couple WASDE reports, we have not seen substantial revisions lower to the corn crop that some people are looking for. And kind of adding to that concern is a resurvey being done by the USDA. We're going to see the results of that out August 12th in their crop production report. But certainly it seems like the market's a little bit concerned right now that not as many new crop soybean acres got put in as what people were thinking a few months ago.
Yeah, absolutely. And you know, one of the things I think that that could also be adding to that is the fact that, you know, we expected corn acreage to be revised lower. Of course, that wasn't the case. So you do have a little bit more corn out there than expected, and then now we have the possibility for less beans. But my question is, though, you know, we're trading up here at pretty lofty levels in terms of this spread and relative to where we've been in the past. Do you think that this could go higher?
You know, I think one thing that could be kind of a bullish card here coming down the pipe over the next couple of months is one thing that you highlighted on Monday's GrainTV is this frost freeze threat. We've started to see it become a lot more prominent in the headlines, I guess, as it relates to ag. So I think it's picking up some traction here. Certainly, we know this corn crop was put into the ground very late, and soybeans in particular. I know as we were talking about your discussions with the guys over at Planalytics, it seems like in particular there's some concern about this soybean crop as we move through the summer into the fall here. So that could be one thing that would support it. Certainly, it seems like in the last couple of days it's drifted back a little bit, kind of reverting to the mean, I suppose. But certainly one thing that could come down the pipe is that frost freeze concern that would be a little bit more serious for the soybean crop.
Yeah, absolutely. Now let's just take a look here at ethanol, because ethanol numbers did come out today. Yeah. You know, is there any change over there?
You know, not really, Cody. We saw a pretty light week in terms of production there. Production was down 21,000 barrels per day to 832,000 barrels per day on average last week. You can see here from the chart that seasonally we expect a pretty good decline, in particular for this week in the marketing year. We saw that here this week. It didn't seem to be a big driver of old crop, however, just based on the strength that we've seen in ethanol production really over the last month or so. You know, moving forward here, I think there's a possibility we could see increased production over the next couple of weeks. Seasonally, we expect it, and seeing the crush margin right now in Iowa improve a little bit. Last week, or excuse me, 2 weeks ago, it was sitting about $1.70 per bushel. This week, we now see it about $2.17, so that's quite a big increase week over week. Certainly giving those ethanol producers a lot more incentive to grind corn right now.
Yeah, and you know, you may end up seeing a little bit of a bid increase, you know, especially after that massive drop that we saw last week in the basis. You know, maybe we'll see ethanol plants pick up their bid a little bit and get a little bit more resilient.
Yeah, you know, Cody, I think those were kind of the two big fundamental news pieces that we saw, or I guess ethanol numbers in particular was the big fundamental driver of the grain market today. We did have some important outside numbers, though, coming into the market by way of the GDP numbers. What did we see there, and what do producers right now need to be kind of thinking about as it terms to the macro market?
Well, you know, the GDP numbers, they came out, and they actually came out a little bit better than expected for the second quarter of this year. We actually saw them released at 1.7% growth. The average guess was 1.4%. And the reason we came out above that is really the sequester didn't impact the economy as much as analysts were expecting. However, there is a little bit of a negative side to this story.
Right.
They revised the first quarter GDP numbers from 1.8 down to 1.1. So that's a pretty big revision there.
Yeah.
Bottom line here is the market really didn't trade this all that much. It
Right.
wasn't a violent move one way or the other.
Mm-hmm.
The truth is here is that I think that this is really not a market mover. It wasn't enough of a change. It wasn't that big of a surprise to drive the market one way or another.
Yeah, certainly. We saw it a little bit in equities and crude oil today. I guess just looking at the grain market in particular, this isn't a big enough story, I guess, to make you think about getting long these 13 corn. We've seen it drift lower quite dramatically here over the last couple of weeks.
No, I don't think it's a big enough story. And, you know, we also had Ben Bernanke talking today, and he was talking about the U.S. economy growing only modestly, and that's kind of a downgrade in terms of the language that he's using. And, of course, we got to keep in mind that, he's controlling the interest rates, and, you know, if he has a little bit of a downgrade in the economy and the forecast going forward, maybe he'll keep that foot on the accelerator, keep the interest rates low. And that really, you know, that sort of stuff does impact the markets. But right now, what we saw today, the language coming out from Ben, that just isn't enough of a game changer here. I think when we look at the ag sector, the trend is most likely going to continue lower here as we look at this large crop coming out in 2013.
Yeah, certainly. Well, we'll keep you posted on all developments here on GrainTV as it pertains to the macro markets and in particular to the grain-specific fundamentals. One fundamental piece of news we're going to get tomorrow is the export sales report. We'll be reporting on that live on Twitter when that comes out. At GrainTV is where you can find us over there. That wraps up, though, what we saw here for a Wednesday in the grain market. Thanks a lot for joining us. We'll see you tomorrow.